Okay, let's unpack this. Imagine a company, not from Silicon Valley, right, but from the heart of Tokyo. A company that's, traditionally focused on more conventional business lines.
Right.
Suddenly making a declaration so bold, it's sending ripples through the entire global financial world. They're signaling a monumental shift in how corporations, especially those outside the U.S., might start approaching digital assets.
Yeah, it's a big signal.
We're talking about a major player in Japan,
Hmm.
potentially earmarking billions, with a B for Bitcoin. This isn't just some flash-in-the-pan headline. It feels like a really strategic move, one with far-reaching implications, and it definitely deserves our full attention today.
What's truly fascinating here, I think, is that it's not just about the large sum of money, although, $3.8 billion is obviously huge, or even just a speculative gamble. It feels much more like a profoundly strategic maneuver. It has these immense kind of nuanced implications, particularly for the wider institutional adoption of digital assets. So our deep dive today is really designed to cut through some of the noise, understand the, let's say, the intricate mechanics of this bold play. We'll explore why Metaplanet is being so directly compared to, to MicroStrategy, that pioneering U.S. crypto adopter.
Right, the Japan's MicroStrategy label.
Exactly. Examining that distinct playbook they seem to be emulating. And maybe more importantly, we'll analyze what this could all mean for Bitcoin's journey toward, global institutional acceptance, particularly from a non-U.S. viewpoint.
That's key.
We want to make sure you grasp not just the what of this announcement, but the fundamental why it matters, whether you're, a seasoned investor, an active trader, or maybe just keenly interested in this rapidly evolving landscape of global finance.
Absolutely. So throughout this deep dive, we're going to pull back the layers on Metaplanet's announcement itself. We'll scrutinize the innovative use of preferred shares, that financial instrument that makes this colossal capital raise uniquely compelling, especially for a crypto-centric strategy.
Very interesting choice.
We'll examine the potential market ripple effects, not just for Bitcoin's price, maybe, but also for the broader investment community, and how this could potentially fundamentally shift the narrative for Bitcoin as a legitimate, strategic corporate treasury asset.
Yeah, moving beyond just speculation.
Crucially, we'll consider how this specific Japanese initiative might inspire, or maybe even challenge, other firms globally, truly expanding Bitcoin's institutional footprint beyond those traditional Western markets. It feels like a potential game changer if it unfolds as people expect. And it raises some pretty powerful questions for all of us, doesn't it?
Yeah, it certainly does. A lot to unpack.
Okay, so here's where it gets really interesting, I think. This isn't some, fresh startup with a flashy crypto name making bold claims out of nowhere.
No, not at all.
This is Metaplanet,
Yeah.
a Tokyo-based company. They've been involved in things like real estate, some fintech, even metaverse-related ventures. Kind of a diverse portfolio.
Right, more traditional roots in some ways.
But they've been quietly, and then maybe not so quietly, building a reputation within the digital asset space, which is how they earned that moniker, Japan's MicroStrategy.
Yeah, that tag really stuck.
And now they're making this very public, very ambitious statement with this capital raise. It demonstrates a profound strategic pivot, wouldn't you say?
Oh, absolutely. It's a signal that they're not just, dipping their toes in the water anymore. They appear to be preparing for a full-on, potentially transformative deep dive into Bitcoin themselves.
A full dive. Okay, so tell us about the raise itself, the numbers.
That's right. So Metaplanet's plan is to raise a staggering $3.8 billion. And to really get the scale of this, you have to think about this amount not just in isolation, but relative to the firm's existing operational footprint and its market cap.
Which are much smaller.
Considerably smaller, yeah. So this signals an ambition that really goes way beyond just incremental growth. It suggests a potentially defining, perhaps even transformative bet on a whole new asset class for them.
Wow. Okay. And how are they doing it? What's the mechanism?
The method for this raise is equally significant. They're issuing 555 million preferred shares. Now, for listeners maybe less familiar with the nuances of capital markets, preferred shares are a distinct class of equity.
Right, not your standard common stock.
Exactly. Unlike common stock, they typically carry fixed dividend payments, so they offer a predictable income stream to investors, which is attractive.
Okay.
They also usually don't come with voting rights, meaning they don't dilute the control of existing common shareholders. That can be a really key consideration for corporate management, especially when making big strategic shifts.
Keeps control intact.
Precisely. And from an investor's point of view, preferred shareholders often have a higher claim on the company's assets and earnings than common stockholders if, things go wrong, like in a liquidation scenario.
So a perceived layer of safety.
A perceived layer of safety, exactly.
Mhm.
Which makes them a pretty intriguing choice for a company making such a, let's say, bold move into a historically volatile asset like Bitcoin.
Interesting. Okay, so the purpose. Officially, what's the money for? Well, the core purpose behind this huge capital raise is ostensibly for strategic expansion, which, they say, potentially includes Bitcoin accumulation, along with things like debt repayment and general business growth.
Right, the standard boilerplate language is in there too.
But let's be honest here. Given their growing reputation as Japan's MicroStrategy and just the general market sentiment around digital assets right now, the market isn't exactly laser-focused on the general business growth line item, are they?
Not really, no. The keyword here really is potentially, but it's a potential the market is running with.
It feels like a very loud potentially.
Precisely. That strategic ambiguity in their announcement, while, legally sound and it gives them flexibility, it's largely overshadowed by that Japan's MicroStrategy Association. The market is effectively reading between the lines.
Or maybe being led to read between the lines.
Perhaps deliberately, yes. When a company with that kind of public identity announces such a massive capital raise and explicitly mentions strategic expansion and potential Bitcoin accumulation in the same breath, well, the implication for investors, particularly those already in the crypto space, is crystal clear.
Significant Bitcoin buying is coming.
That's the expectation. This isn't just some casual mention in the footnotes. It feels like a deliberate strategy to attract a specific type of capital that's actively seeking Bitcoin exposure. And they're anticipating a very specific market reaction.
Janking on that comparison.
Exactly. This approach relies heavily on that perceived correlation to their American counterpart, MicroStrategy. It signals an intent to replicate a proven, albeit, unconventional, strategy for integrating digital assets right into the corporate treasury.
So if we pull back and just look at the bigger picture here, what does this all really mean for us, for the market? $3.8 billion is, it's an astronomical sum, particularly when you think about Metaplanet's current size. Why is this specific amount and the involvement of a Japanese company like Metaplanet so uniquely significant right now at this moment?
Well, as we touched on, $3.8 billion isn't just a large figure in absolute terms. It's potentially transformative when you measure it against Metaplanet's existing operational scale.
Right.
This isn't some incremental capital raise to simply, expand an existing product line by a few percent. This feels like a fundamental, almost existential strategic pivot.
Wow, existential.
It signals a company that's willing to make a significant, potentially defining bet on what is still, let's face it, a relatively nascent asset class for corporate treasuries. This aggressive shift means a huge chunk of their financial future is being intentionally tied to the performance and the long-term viability of Bitcoin.
They're going all in, potentially.
It loudly proclaims, we are not just dabbling here. We are fundamentally reorienting our entire corporate strategy around this asset. And that deepens the why now question beyond maybe just, say, simple currency weakness hedging. It suggests a much longer-term strategic vision for their asset allocation.
And this is exactly where that comparison to Michael Saylor's MicroStrategy becomes so critical, isn't it? Metaplanet is being called Japan's MicroStrategy.
Sure.
For anyone who might not be super familiar, what exactly does that pioneering playbook look like?
Yeah.
And frankly, how successful has it really been for MicroStrategy?
Yeah, the MicroStrategy playbook is quite distinct. And honestly, it's been profoundly influential in the whole corporate adoption story of Bitcoin. It essentially involves repeatedly raising substantial amounts of capital.
Again and again.
Primarily through things like convertible debt offerings and sometimes equity issuance, specifically for the purpose of buying and holding Bitcoin, accumulating it. By doing this, MicroStrategy effectively transformed itself. It went from being a sort of traditional enterprise software company into essentially a proxy Bitcoin ETF, an exchange-traded fund.
Right. A way for stock investors to get Bitcoin exposure.
Exactly. Investors who wanted exposure to Bitcoin, but maybe didn't want to hold it directly or navigate the complexities of pure crypto exchanges and wallets, they could just buy MicroStrategy stock, MSTR.
Simple enough.
They were essentially betting on the company's ability to acquire Bitcoin, hold it securely, and maybe most importantly, articulate a strong long-term thesis for why Bitcoin was valuable. And the market. Well, the market has responded by valuing MicroStrategy significantly based on its Bitcoin holdings. Its stock price often correlates pretty directly with Bitcoin's performance.
So it worked in that sense.
In that sense, yes. And Metaplanet appears to be directly mirroring this approach. It signals a potential shift in corporate finance models, not just in Japan, but maybe for other non-US entities looking to integrate Bitcoin onto their balance sheets as a core strategic asset. The success, or at least the market's validation, of MicroStrategy's strategy provides a powerful, if somewhat unconventional, precedent.
So Metaplanet is basically looking at the blueprint and saying, okay, we see this, we think it's viable, maybe even necessary, not just for the U.S. market, but adaptable for Japan and maybe elsewhere too. It's a fascinating strategic echo, especially in a totally different regulatory and cultural environment.
Absolutely. And, to delve a bit deeper into the strategic use of these preferred shares as a market signal, it's actually quite an ingenious piece of financial engineering when you think about it in this context.
Stop so.
Well, from Metaplanet's perspective, this structure lets them channel significant funds into these strategic, potentially high-growth bets like Bitcoin, but without immediately diluting their existing common stock.
Ah, okay. That's important for current shareholders.
Extremely attractive for existing common shareholders, right? Because their ownership percentage isn't immediately watered down, even as the company brings in this massive amount of new capital for what they presumably view as a high-potential, game-changing strategy.
So management can be aggressive without upsetting the apple cart too much.
It allows management to pursue a really aggressive Bitcoin accumulation strategy without necessarily triggering shareholder discontent over dilution or losing control. It's a way to maintain that corporate control while fundamentally shifting the company's entire asset base. And, in the Japanese context, where corporate governance can often be seen as more conservative, finding a mechanism to fund such a bold pivot without overly agitating existing shareholders, that's a key strategic advantage.
So it's almost like a carefully constructed bridge, allowing a maybe broader, more traditional type of investor to get exposure to this new, exciting, but maybe scary space without having to dive directly into the deep end, the often volatile waters of pure crypto assets.
That's a perfect analogy, precisely. For investors, these preferred shares offer equity ownership, but with the added sweetener of fixed dividends. That income stream, coupled with the potential for capital appreciation if the company's underlying Bitcoin strategy pays off, well, it can be perceived as less volatile, maybe safer, than buying direct common equity in a company making these huge, arguably speculative crypto bets.
Broadens the appeal.
It significantly broadens Metaplanet's potential investor base. It could attract more conservative capital-think institutional investors, maybe pension funds, or even just risk-averse individual investors, folks who might otherwise shy away from direct Bitcoin investment or even common stock in a company with such a laser-focused crypto strategy. It's a sophisticated way to bring traditional finance players into the fold, giving them Bitcoin exposure through a more familiar and arguably less directly risky investment vehicle. And that, I think, speaks volumes about the evolving sophistication with which companies are approaching digital assets now and crafting these financial instruments to bridge that gap between traditional finance and decentralized finance.
Okay, so let's talk impact. If these billions of dollars truly do flow into Bitcoin, which, given everything we've just discussed, seems to be the strong market expectation, what's the potential impact on Bitcoin itself? We're talking about a substantial influx of capital into the market here.
Oh, absolutely. If Metaplanet fully executes on this implied plan and deploys these funds, or even just a significant chunk of them, for Bitcoin purchases, this could easily become one of the largest single corporate buys in Bitcoin's entire history.
One of the largest, wow.
Yeah. To put that into some concrete perspective, a $3.8 billion allocation, depending on market prices at the time of purchase, could translate into acquiring tens of thousands of Bitcoin, maybe even more, tens of thousands.
This would instantly place Metaplanet right up there among the top corporate holders globally, alongside, and perhaps very quickly challenging, MicroStrategy as a major force in the market. The potential for sustained buying pressure on Bitcoin would be significant.
So not just a one-off splash.
Potentially not. It implies not just a one-time purchase, but possibly ongoing acquisition as that capital gets deployed over time. And that kind of consistent, large-scale institutional demand has a fundamental impact on Bitcoin's supply-demand dynamics, especially, given its famously capped supply.
Right, the hard cap. Okay, and as we discussed earlier, that preferred share structure is absolutely key to bringing in the capital, but it also fundamentally influences who is investing and how they're getting this exposure, doesn't it?
That's a really crucial distinction, yes. The appeal of preferred shares is precisely their ability to draw in a broader, and generally you could say more conservative investor base compared to common stock or certainly direct crypto exposure.
Who are we talking about specifically? Well, consider traditional institutional investors, maybe family offices, or even wealthy individuals who are perhaps more accustomed to fixed income investments like bonds. They might find the steady dividend yield from these preferred shares highly attractive, especially when you compare it to the often, frankly, meager yields you get from traditional bonds in today's or recent low interest rate environments.
Offers a better yield, potentially.
It offers a differentiated risk-reward profile. They receive equity exposure to a company with a strong Bitcoin thesis, right? But with a more stable return profile coming from those dividends. It shields them somewhat from the direct day-to-day volatility of Bitcoin itself or even Metaplanet's common stock price swings.
So it brings new money in.
This mechanism could introduce entirely new, substantial pools of capital into the broader crypto ecosystem, albeit indirectly. It broadens the base of support for digital assets significantly, bringing in players who might not have participated otherwise.
Okay. Now, we've definitely seen this kind of thing before with other major corporate buys, haven't we? What about the front-running aspect that often seems to accompany these types of big announcements in the crypto markets? How does that typically play out?
Yeah, front-running is indeed a very common behavior in crypto markets when large anticipated buys are announced or even just strongly rumored. And Metaplanet's move is certainly of that magnitude.
So what does it mean in this context?
In this context, it basically refers to crypto traders, could be retail, could be institutional, preemptively buying Bitcoin because they anticipate that a massive buyer like Metaplanet is about to enter the market with billions of dollars to deploy.
They're trying to get in ahead of the big buy orders.
Exactly. The expectation is that this huge wave of demand will inevitably push up Bitcoin's price, at least in the short term. And these traders aim to profit from that anticipated surge.
We saw this with MicroStrategy, right? The pump cycles.
We've seen very similar dynamics with what are often called the MicroStrategy pump cycles, where announcements of their capital raises or even just rumors of them often preceded or coincided with positive movements in Bitcoin's price. The market effectively moved to capitalize on that expected future demand before it even hit the order books.
So traders are positioning themselves now.
Traders might be using various financial instruments, simple spot purchases, maybe futures contracts, options to position themselves ahead of these anticipated Metaplanet buys. And this creates this fascinating interplay of short-term market speculation, which often drives immediate price reaction, driven by the anticipation of the longer-term fundamental impact of actual corporate adoption. So the Metaplanet announcement alone, even before a single Satoshi is potentially purchased, acts as a significant catalyst in itself. It shapes immediate market expectations and trading strategies right now.
Okay, stepping back again. This isn't just about one company deciding to buy a boatload of Bitcoin, is it? This move, especially because it's coming out of Japan, feels like it reinforces a much bigger idea about Bitcoin's evolving role, its role in the global economy, and maybe even within traditional finance itself.
That's a crucial point to emphasize. Metaplanet's actions really do transcend their own balance sheet. They significantly reinforce Bitcoin's narrative as a legitimate corporate treasury reserve asset.
Moving beyond just digital gold for individuals.
Exactly. For many years, let's be honest, Bitcoin was largely relegated to the fringes, viewed primarily as a speculative high-risk gamble. But seeing a company of Metaplanet's stature operating within a major global economy like Japan, making such a potentially substantial allocation, it signals something powerful to other corporations globally.
What does it signal, specifically?
It signals that Bitcoin is perhaps a viable, maybe even a strategic component of a diversified treasury management strategy. This helps move Bitcoin conceptually from the realm of pure speculation into a more fundamental institutional role, seeing it as a component of a balanced modern corporate balance sheet.
Legitimacy is key.
This legitimization is paramount for broader adoption because it provides a kind of practical blueprint. It shows how other forward-thinking companies might manage their excess cash, maybe hedge against inflation risks, or just diversify their asset holdings in what feels like an increasingly volatile global economic environment.
And the fact that this is a Japanese company specifically, rather than, another U.S. firm jumping on the bandwagon, that seems to add a really distinct layer of significance. Does that truly change the game compared to, say, a firm based in Silicon Valley? What are the specific nuances there?
Oh, it absolutely does. And this is where I think some of the deeper insights really start to emerge. This move sets a powerful, arguably even groundbreaking precedent for non-U.S. companies leveraging their traditional equity markets to accumulate Bitcoin.
Because most of the action has been U.S.-centric so far.
Historically, yes. Much of the corporate Bitcoin adoption narrative has been dominated by U.S. firms MicroStrategy, Tesla, Block, others, often benefiting from what's seen as a relatively permissive regulatory environment, at least compared to some other regions, and maybe a corporate culture that's somewhat more open to disruptive technologies.
But Japan is different.
Japan is a major global economy, yes, but it has a unique and often perceived as cautious regulatory environment. And it has a distinct corporate culture that often prioritizes stability and long-term planning over maybe rapid disruption.
So for a Japanese firm to do this,
For a Japanese firm to take such a bold step signals that this kind of strategy isn't necessarily confined to a specific geographic or regulatory bubble in the U.S. It could potentially inspire similar moves in other Asian regions, or indeed globally, where corporations might be looking for alternative asset strategies amidst their own varying local economic conditions and regulatory landscapes.
so the playbook is transferable.
It suggests that the MicroStrategy playbook, as we've been calling it, is not just potentially successful, but maybe adaptable and replicable, even in diverse international markets. And that really challenges the previous perception that these kinds of bold crypto treasury strategies were primarily a Western, maybe even just an American phenomenon.
So it's not just about more capital potentially flowing to Bitcoin then. It's fundamentally about the geographical spread of that adoption. It's globalizing the very concept of Bitcoin as a treasury asset.
Indeed. Metaplanet's move deepens the globalization of Bitcoin adoption in a very tangible, very significant way. It expands the concept of these crypto-aligned corporations well beyond U.S. borders, fostering potentially wider international acceptance and integration of Bitcoin into the fabric of traditional finance.
Yeah.
But let's overlay a crucial macro lens here as well. The context of Japanese yen, the JPY weakness.
Right, the currency situation.
The Japanese yen has experienced periods of significant depreciation against other major world currencies, raising real concerns domestically about its purchasing power over time. So for a Japanese company like Metaplanet, allocating substantial treasury reserves to Bitcoin, well, it could be viewed not just as a growth play or speculation,
But as a hedge.
but potentially as a strategic hedge against local currency depreciation. In an environment where traditional fiat currencies are experiencing volatility or debasement concerns, Bitcoin offers this decentralized global alternative store of value.
That adds another layer of logic.
It adds another quite profound layer of fundamental economic rationale to Metaplanet's potential decision. It positions Bitcoin not just as a speculative asset, but possibly as a strategic countermeasure against specific national currency risks. And this kind of move, by a non-U.S. firm facing specific local economic pressures, well, it could catalyze a shift in how corporations globally view their national currency risks and explore potential, maybe non-traditional solutions for preserving capital.
So the question becomes, could other companies and economies facing similar currency pressures soon follow suit?
That's exactly the question it raises. It could be a very powerful catalyst.
Okay, to really grasp maybe the weight and the potential impact of what Metaplanet is doing or signaling they might do, it really helps to look at others who have ventured down similar paths, right? Whether they were successful or maybe learned some hard lessons along the way.
Yeah.
What supporting stories, what case studies can we draw from to give us that essential historical context?
It's absolutely vital, I agree, to place Metaplanet's decision within this broader historical context of corporate Bitcoin adoption. And MicroStrategy, of course, serves as the primary case study here. They are the undeniable pioneer in this specific space.
They really kicked it off in a big way.
They did. Starting back in August 2020, they systematically raised capital, both through those convertible debt offerings we mentioned, and sometimes common equity issuance multiple times, specifically to purchase and then hold Bitcoin on their balance sheet.
With a very clear goal.
A very clear, publicly stated goal. Their CEO, Michael Saylor, became this incredibly vocal evangelist for Bitcoin. He articulated a powerful narrative for its role as a superior treasury reserve asset, arguing it was a necessary hedge against inflation and monetary debasement from central banks.
Right, the digital energy narrative as well.
All of that. This strategic pivot effectively transformed them, as we said, into that de facto Bitcoin ETF, offering investors a publicly traded vehicle to gain Bitcoin exposure easily. And MicroStrategy's share price has since largely tracked Bitcoin's performance, really solidifying their status as this proxy investment.
So Metaplanet is clearly looking at that playbook.
Metaplanet is drawing direct, almost explicit parallels from this highly visible and certainly from a market valuation perspective, demonstrably successful strategy. They're clearly signaling their intent to emulate MicroStrategy's model, but within a distinct geographical market, Japan.
Okay. But MicroStrategy wasn't the only major corporate player to make waves, right? Tesla also made a big splash, but maybe with a slightly different approach, didn't they? What can we learn from their experience?
Precisely. Tesla's Bitcoin purchase back in early 2021 was another huge landmark event. It instantly legitimized Bitcoin further in the eyes of many traditional investors and the wider public.
Elon Musk getting involved always makes headlines.
Absolutely. They diversified a significant portion of their corporate treasury. Initially, it was $1.5 billion into Bitcoin. It signaled a really bold move by one of the world's most innovative and visible companies at the time.
But they didn't just hold.
Well, it's important to note the nuance here, yes. Tesla later sold a portion of its Bitcoin holdings. Officially, the reason given was primarily to demonstrate Bitcoin's liquidity as a viable alternative to holding cash on the balance sheet.
Okay, proving it could be sold easily if needed.
That was the rationale. But it provides a really valuable contrast to MicroStrategy's strategy, which has been much more diamond hands, hold at all costs. It shows that different corporations clearly have varying risk appetites and different approaches to holding Bitcoin as a treasury asset.
Not everyone is a maximalist holder.
Exactly. Some, like MicroStrategy and potentially Metaplanet, seem to commit deeply to it as a core long-term strategic asset. Others, like Tesla, might treat it as a more flexible treasury diversification, maybe subject to changing market conditions or strategic shifts related to their core business operations, like needing cash for expansion. This spectrum of approaches really enriches our understanding of the varied strategies and the complex considerations involved in corporate Bitcoin adoption.
Okay, that makes sense. And it's not just corporations anymore, is it? We've even seen nation-states starting to dabble in this, which demonstrates just how broad this trend, or at least the conversation around it, has become.
That's absolutely right. Broadening the scope even further, we have the case of El Salvador. They've embarked on this unique, truly pioneering strategy of accumulating Bitcoin as actual sovereign reserve.
Buying the dip, famously.
Famously buying the dip, yes. Funding these purchases through a combination of things like bond revenue and even tax income generated from the burgeoning crypto ecosystem they're trying to foster within their own borders.
That's a fascinating parallel to corporate strategy.
It provides a fascinating parallel to a corporate treasury strategy, exactly, but obviously on a national scale. It demonstrates that the core principle accumulating Bitcoin as a reserve asset is gaining traction, not only in the private sector, but even at the nation-state level, however controversial it might be.
Yep.
This bold move by a sovereign entity underscores the growing belief, at least in some quarters, in Bitcoin's long-term value proposition, its potential as maybe a hedge against global economic instability, and its role in a diversified financial portfolio, whether that portfolio belongs to a company or an entire country. It really asks the question, if a nation-state sees potential value, why wouldn't forward-thinking corporations also consider it?
Good point. So we have pioneers focusing solely on Bitcoin for their treasury, others using it for maybe more flexible diversification, and even countries getting involved. What about companies that are simply building around the crypto ecosystem itself, rather than solely holding Bitcoin as a balance sheet asset? Is that different?
That's a really important distinction to make, yes. And it highlights the diverse ways that capital is entering the digital asset space. Firms like, say, Galaxy Digital or Coinbase are excellent examples of companies that have raised significant capital over the years.
But not necessarily just buy Bitcoin with it?
Not primarily to hold Bitcoin on their balance sheet in a treasury strategy like MicroStrategy or Metaplanet seem to be doing. Their capital raises are typically for expansion into the broader crypto ecosystem.
Like building services.
Exactly. Developing financial services, building trading infrastructure, expanding their crypto-centric business operations globally, and crucially, facilitating institutional access to digital assets for others.
So they're enablers of the ecosystem.
Precisely. While these firms are undeniably crypto-aligned, and their growth certainly supports the overall ecosystem, Metaplanet and MicroStrategy represent a different but equally significant vector of adoption. They represent more traditional companies or companies pivoting, integrating Bitcoin into their Treasury strategy as a primary reserve asset, rather than just offering crypto-related products or services. Both pathways contribute heavily to the maturation and legitimization of the digital asset space, but they do so through distinct financial and strategic approaches.
Okay, this deep dive has really offered so many layers of insight into Metaplanet's bold, potentially game-changing move to truly cement our understanding of what's unfolding here, what key charts or metrics or maybe economic indicators could really put this all into perspective for us, tie all these different threads together visually or conceptually.
Yeah, to try and connect all these data points into a more cohesive understanding, let's visualize some key metrics and relationships. Firstly, I think a close examination of Bitcoin's price action versus MicroStrategy's capital raise and subsequent purchase announcements would be highly illustrative.
Looking at the historical correlation.
Exactly. We've seen historically how MicroStrategy's repeated capital raises and their publicly announced Bitcoin buys have often, though not always immediately, correlated with positive movements in BTC's price trajectory. Analyzing those past patterns can help solidify the idea of a somewhat predictable market reaction to this kind of large-scale institutional interest. You can literally plot the dates of their announcements against the Bitcoin chart and often see something happen.
Provides a potential template for Metaplanet.
It provides a useful, albeit imperfect, template for what we might expect from Metaplanet if they follow through. Secondly, and this is more forward-looking, once this capital actually starts getting deployed, assuming it does go into Bitcoin, we would want to closely track Metaplanet's own stock price correlation with Bitcoin.
See if it becomes a proxy like MicroStrategy.
Precisely. If Metaplanet truly solidifies its position in the market's mind as Japan's MicroStrategy, we would anticipate its common stock price to increasingly mirror Bitcoin's movements over time. This would effectively position it as an indirect investment vehicle for BTC exposure, particularly attractive for investors who prefer traditional equity markets or maybe face restrictions on direct crypto investment. That correlation itself would be a strong market-driven indicator of how the financial world is perceiving and valuing Metaplanet's new Bitcoin-centric strategic direction.
And if they do follow through on deploying a significant chunk of this $3.8 billion, just how big are we talking in terms of their actual Bitcoin holdings? Where would they potentially stand on the global stage?
Right. If a substantial portion of that $3.8 billion is indeed allocated to Bitcoin, it would be absolutely fascinating to visualize a corporate BTC holdings leaderboard. We could project, based on current or projected Bitcoin prices at the time of purchase, where Metaplanet might realistically rank among the major known corporate holders like MicroStrategy, Tesla, maybe Block, and others.
Puts it in perspective.
It's not just about the bragging rights or the number itself. It places Metaplanet visually on the global stage of corporate Bitcoin holders. It showcases the rapidly growing roster of institutions, big and small, that are backing Bitcoin. And it highlights its increasingly central role, potentially, in modern corporate finance. Such a ranking provides really tangible evidence of Bitcoin's ongoing institutional integration. Furthermore, circling back to our discussion on the funding mechanism, a detailed preferred share structure analysis would be crucial, especially for potential investors considering this specific route.
Getting into the nitty-gritty.
Yeah, going beyond just the basic definition, you'd want to compare their specific dividend yields against, say, traditional corporate bonds of similar risk profiles, maybe even government bonds, while factoring in the, let's call it, risk premium associated with the underlying Bitcoin exposure.
Assessing the risk-reward.
Exactly. This would reinforce the unique investment appeal for that more conservative capital we talked about. It shows how Metaplanet is potentially attracting funds by offering a more stable-looking return profile than direct crypto, while still providing a unique form of exposure to the asset class. It really highlights the clever financial engineering involved and the specific investor segment Metaplanet seems to be targeting. And finally, and I think this is crucial, we absolutely need to keep bringing in that overarching macroeconomic context, specifically that relationship between JPY weakness and Bitcoin potentially acting as an alternative store of value.
The Japan-specific angle.
Yes. This adds that profound layer of fundamental economic rationale to Metaplanet's decision, potentially. For a Japanese company, especially given recent and maybe ongoing currency fluctuations where the yen has faced significant pressure against the dollar and other currencies, Bitcoin might not just be viewed internally as a growth investment, but as a vital strategic hedge against that local currency depreciation.
A way to preserve value internationally.
Potentially. Japan's unique economic situation, its long history with deflationary pressures, its recent aggressive monetary policy shifts makes this hedging strategy particularly relevant and perhaps more compelling than it might be for a U.S. company right now. This layer of analysis underscores the potentially deeper, more fundamental reasons behind such a bold corporate move. It positions Bitcoin as a possible answer to specific national economic challenges.
Wow. Okay, as we wrap up this incredibly insightful deep dive, we really want to leave you, our listener, with some powerful questions to maybe ponder on your own time. This whole situation, Metaplanet's really bold play, raises some big ones, doesn't it?
It really does raise several important questions for all of us to consider as this unfolds. Based on everything we've discussed today, maybe ask yourself, do you genuinely believe Metaplanet is poised to become the next MicroStrategy? Not just in its stated ambition, but in its actual execution and its lasting market impact. Could they really set a new and significant standard for corporate crypto adoption, particularly across Asia? Secondly, try putting yourself in the shoes of an investor for a moment. Would you personally trust a company that is raising billions, specifically through preferred shares, with the clear primary intention being to buy Bitcoin? Would you view that as a sound and prudent investment strategy for your own capital? What specific factors? Maybe it's the dividend yield, maybe the company's broader track record outside crypto, perhaps the overall global economic outlook. What would weigh most heavily in your decision-making process? And, looking at the broader market implications, is this move unequivocally bullish for Bitcoin in the long term? Does it provide undeniable validation for its role as a global reserve asset and a serious corporate treasury holding? Or could it possibly be seen as just another example of a risky corporate gamble that might not ultimately pay off? Could it potentially expose its investors and maybe even the broader market to significant volatility and unforeseen challenges down the road? And finally, consider this potential ripple effect. If more Japanese companies, or indeed corporations across Asia and maybe other regions, begin to embrace and execute similar Bitcoin accumulation strategies, leveraging their own equity markets for these massive capital raises, does that fundamentally flip the script on global adoption? Could this shift the power dynamics in the crypto world away from being so US-centric? Could it accelerate institutional integration in ways we might not even fully comprehend yet? Lots to think about. Hashtag tag outro.
What an incredible deep dive that was into Metaplanet's ambitious plans and the, frankly, profound implications they hold for the future. We've seen how a colossal $3.8 billion capital raise, potentially skillfully orchestrated through those preferred shares, could catapult a Tokyo-based company right into the top ranks of the largest corporate Bitcoin holders globally.
Potentially, yeah. A huge move if it happens.
This move directly echoes the pioneering strategies of giants like MicroStrategy, but as we discussed, with a unique Japanese context and potentially different motivations. This isn't just another financial transaction announced in a press release. It feels like a powerful signal for Bitcoin's evolving narrative becoming a legitimate and strategic corporate treasury asset, moving far beyond its earlier purely speculative origins.
Ultimately, Metaplanet's strategic pivot, assuming it's executed as anticipated by the market, is far more than just a large investment hitting the books. It's really a testament to the growing global conviction, in some influential circles at least, in Bitcoin's long-term value proposition. And by leveraging traditional financial mechanisms like these preferred shares, they are setting a potentially significant precedent for other non-US companies to engage with digital asset accumulation. This could really deepen the globalization of Bitcoin adoption in a meaningful way. It challenges all of us, I think, to consider how traditional finance is increasingly finding innovative, yet somehow familiar, pathways to engage with and integrate the digital asset space right into core business strategy.
So as you reflect on this really compelling story, maybe consider this final thought. Could this bold Japanese initiative truly signal the start of a new widespread wave of corporate Bitcoin adoption, particularly outside the United States? Could it fundamentally reshape how we understand and utilize digital assets in the global economy and potentially accelerate a new, truly international era of financial innovation? Something to watch very closely.